We are live. This is the market update. I am your host, Bill Noble. Welcome to the great financial crisis of 2025, everybody. Ready? Of course not. Okay, let's start with the good news. The Fed's coming in and Bitcoin's going up a lot. And that's the market update. Literally everything Satoshi ever talked about could be happening right now. We have policy error just about every which way you can. And somebody has already noted here in the comments that we are heading for Michael Saylor's average price in Bitcoin. And Michael Saylor is too big to fail because remember, Bitcoin leverage is attached to legacy. Of course, he's also a genius for issuing all this stuff before stocks collapse, but that's another story. So he's too big to fail, and we have problems in both hedge funds and private equity. We'll go over it, and one of the reasons why it's so interesting is that if there are these problems out there that can't be solved, the Fed's coming in with 75 basis points and QE, and that's imminent. The only question is, do they wait for stocks to go lower? There are signals in the bond market. There are signals perhaps in the stock market, but primarily the bond market that something is horribly wrong. Horribly. There was an emergency meeting at the Fed, very small headline 2 or 3 days ago. Everybody thought that was about the stock market. It's about the bond market. You have multiple spectacular blowups going on. Okay, so let's discuss the blowups. We'll try to put some charts and some news articles up, but most likely you're going to be like, let's start with the bottom line. The bottom line is it's all about Bitcoin. You may have to make position adjustments unless you got like micro caps that you love. You know, this could be a situation where Bitcoin just goes straight up. And it's just Bitcoin. Now, the disclaimer on that is that back in the global financial crisis days of 2008, gold actually went down. Gold did not perform well. So hopefully that's not what happens to Bitcoin. Hopefully. But I do think Arthur Hayes is right. It's happening right before our eyes. You know, you've actually got 4 points of pain. All right. So let's entitle this, Why Bitcoin Could Go to 110 Right Now. Like what could cause everybody to go, oh, gee, I have to get into Bitcoin. Okay. Point number one, the Chinese have completely let their currency collapse. They don't care. They don't care. Like, okay, you want to tariff our goods. You want to make Chinese goods more expensive. No problem. We'll just make them cheaper and we'll just let our currency collapse. We'll just print, let our currency collapse and then put 100% tariffs on your goods. Okay. So you're going to have incredible market volatility in the currency market in general. And we're in an environment where the more incredible market volatility you have, the more upset people are going to get and the more people are going to sell. And potentially the only thing there is to sell is either S&P futures or Treasury bond futures because everyone is about to panic. Okay, now believe it or not, that's the China angle. That isn't even the big angle. All right. Next, introducing what's all over the nerdy legacy news media. It's called the Treasury basis trade. Now, to keep it simple, there's a difference between Treasury bonds and Treasury bond futures. Okay. And of course, since everything in legacy is so fancy and cute and you know, we all have spreadsheets and fancy mathematics, that hedge funds literally borrow hundreds upon hundreds, if not a couple $1 trillion to play this game where they collect this little spread between Treasury bonds and Treasury bond futures. All right. Well, obviously, as you may be able to tell from looking at the screen, bonds, which should be going up, are going down. And there's something wrong with this trade because, like, if you think Michael Saylor borrowed a lot of money to do his trade, the amount of leverage in the hedge fund system, particularly in this, we'll just call it the little weird trade, right? The amount of leverage is spectacular. And right now it would appear, although I can't see all of it, that this trade is blowing up. That you have you could have a multi-trillion-dollar hedge fund blow up happening. So like 2008 was the banks, right? This is hedge funds, big ones. Like, and you got to remember, hedge funds don't exist in legacy on an island. You know, they have credit and borrowing relationships, because where did they get all this borrowed money from? You don't just, you know, it's not like on crypto where you just like slide the little lever, you slide the little thing on the exchange to get leverage and increase your risk. In legacy, when you get levered, you actually have to borrow money from somebody. All right. So that's hedge funds, right? This is a very big pickle. There was a case of this in 1998 where some big strategy from a company called Long-Term Capital Management, they had some fancy quantitative strategy that couldn't survive an international currency crisis, ironically, out of Asia. So, poof. All right. Long-Term Capital Management blew up. Stock market went down 25%, and Greenspan had to cut rates 3 times and basically absorb the hedge fund and all of its assets to stop the debacle. Okay. Then we have something you may not know about, which I can try and talk about, but you have private equity firms. Okay. Now, private equity firms, you know, they do things like they go buy companies, like let's say Hooters goes bankrupt, they go in and buy Hooters. You know, private equity is a $4 trillion industry. Now, one of the things that's going on in private equity is that as the whole world shakes here, investors are trying to get their money back. Okay. And a lot of times these funds that go around and do these type of investments, they rely on liquidity. Okay. They rely on liquidity. They rely on the ability to get their money in and out. And guess what? This is why BlackRock wants tokenized assets. Okay. So while the exposure often stretched beyond investors' risks limits and even led to a wave of borrowing by many institutions, that's how big their positions are and how over-levered they are. They had bet the situation was manageable and would be quickly resolved by a revival in deal-making. Whoops. Now, after global stock markets dropped by trillions, these institutions are facing a double hit. Everyone was hopeful the private machine would restart, but now pressure is very real. Most people don't want to sell their investments in these private equity entities below 80 cents on the dollar. But this time could be different. All right. So basically, there are illiquid legacy investments out there that are not tokenized that people can't sell. Does that sound familiar? Yeah, that's 2008, homie. That's 2008. We have this legacy concoction that we've made. We got massively over leveraged in it and we can't sell it. So what are all these people going to do? Well, they could come in and just start indiscriminately selling S&P, as we talked about this, right? Everybody's got a problem. Everyone doesn't know what to do. Everyone has some kind of complicated legacy problem. And then at the end of the day, right, all the problems all funnel down to S&P futures because it's the only thing big enough to hedge. So if my levered treasury blah, 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 blah trade blows up, the only thing I can do is come in and sell S&P. That's it, potentially. So S&P detaches from reality and just plummets. And then, of course, you've got the Chinese who understand with this trade war that, you know, the Chinese are fully aware of what's going on here. And so is the Fed, hence the emergency meeting, right? Chinese are like, yeah, we'll let our capital markets go to zero. Like our capital markets will go to zero and your capital markets will go to zero and we'll see who's left standing. It's not a bad strategy. Now, the only difference is
is that, like I said, the Fed can come in here and the Fed is going to have to come in here. There's no question about it. The only question is, did they let it blow up a little and then come in, or did they let it blow up big? And when I mean come in, I'm not talking about a 25 basis point rate cut. Fed comes in here with a 25 basis point rate cut with all this stuff on the tape, then it's really going to get nuked. I mean, when the Fed comes in, they have to come in big. Most likely they have to let it go down. We'll go over the stock charts. They have to let it go down, and then they have to come in huge. Huge. With QE, with the whole thing. Because if they don't, right, you're going to have like something worse than COVID. Matter of fact, the legacy press is reporting that whatever hedge fund blow up is going on here is like, several orders of magnitude larger than a similar blow up that happened off the COVID shock that brought the Fed in with trillions. And the same thing is probably going to happen because they can't let the whole system go down. They already have a trade war, which is very similar to COVID. In other words, industrial production. If you got 100% tariffs on everybody's goods, that's it, right? You can buy, you can buy celery and, stuff at the farmer's market, and everything else is hosed. That's COVID. So it's like a COVID-like problem without whatever came with that. This, in a way, is fear that the general public does not understand. I had to have AI explain it to me this morning so I could turn around and explain it to you. The Financial Times wrote this thing up about the private equity companies blowing up. And then I still had to read a French summary of that in order to get it. So it's not like, CNBC is going to be like, well, this morning we have blah, blah, blah. Yeah, they're all going to read about the bond market thing on Zero Hedge. Simple fact of the matter is you cannot have a shock. In crypto, it's like they liquidate everybody, they pull all the chips off the table, and that's it. Now, in legacy, this could be Legacy's FTX. This could be where you have people who are just over leveraged. You've got the whole world long the Magnificent Seven. You've got retail buying the dip. And then you start having things get out of hand. Now, what's the good news? What's the good news? Arthur Hayes could be right. All these clowns are always talking about like 150K, 250K Bitcoin, $1 million Bitcoin. Everyone's always talking about this. Dude, this could be it. This could be an all of a sudden panic reval. The Bitcoin ETF from stocks, and then people just coming in and outright saying, I got to have Bitcoin. If they can't sell enough S&P futures, the only thing, right? The only thing that works is Bitcoin. And to a certain degree, you have to be somewhat careful in altcoins. Because, if every speculative asset gets wasted and the only thing that goes up is gold and Bitcoin, and even in the case of Bitcoin, because it is correlated with NASDAQ most of the time, you still have to keep your fingers crossed. But I was watching this last night. I mean, it looked like crypto looked last night like it wanted to just whoosh, like it was just going to like blow up. And it didn't. Like Bitcoin is actually holding, like everything else isn't. But you got to watch out here because I think Arthur Hayes, like Ray Dalio is pressing the end of the world, right? So he's out pressing his book, and Arthur Hayes is out pressing that, this is it. So I used to have a colleague who's like her hedge fund proprietary trading blow up fantasy was sell bonds, sell stocks, sell dollars. If you got that going on, which is what you have going on right now, that's Bitcoin. If that isn't Bitcoin, I don't know, then we're all screwed. And Michael Saylor is going to get liquidated. And I don't see that happening. If Michael Saylor gets liquidated, with all this going on, you could have everything collapse. Everything. So, Michael Saylor borrowed a lot of money. And it kind of makes sense, right? Everything goes up. Michael Saylor gets his average price tested, and I'm going to tell you something. Eagle King had the tweet yesterday. I read the tweet and I was like, I don't really understand what that means.
Michael Saylor said, if you knew what I know, Bitcoin would be at $10 million. I was like, that's kind of an interesting thing to say. What does Michael Saylor know? And then I was like, oh, wait a minute. Michael Saylor was eating lunch with the Trump kids. Michael Saylor was at the summit at the White House. Maybe they knew about this whole thing. Maybe they knew they were going to drop some kind of tariff bomb, and that maybe Michael Saylor can pick up the phone and actually talk to senior people and be like, yeah, there's something wrong in the system. What does Michael Saylor know that the rest of us don't? Actually, we do know. It's all over the tape. I mean, Eagle King is pouring it in as I speak. But there's a way to fireside chat this, right? So it's like somebody was asking me yesterday, what do we do? Right. So I got the Michael Saylor tweet because the Eagle King is a freaking genius. Okay. I got the Michael Saylor tweet. We'll go over that. But really, this is kind of a fireside chat kind of thing. I mean, we'll go through it. Okay. So let's welcome who's here for all the cheery buy Bitcoin news. SGSG. Oh my God. First on the stream. Zapatis Mitchell. World Liberty is puking. And where is Saylor? Okay. Probably praying. But like I said, it's not going to $13 million. It's not going to $10 million. It's not going to $150,000 without a catalyst. This is the catalyst. Could be this and then something with AI later. So you could have the negative catalyst and then sit and then have the positive catalyst. Because if you don't think you're going to need an alternative financial system after this debacle, oh, you better think again. Gian, Warmon, Taz Pinball, Vanessa, Lee, Jacob, Tyler, oh no, Lee, what's up? Mr. Lopez from Portugal, hello. Can't Stop the Cap TV. Kobe, Metal Synthetics. Bud 74. Okay. So with the legacy nuke explained, let's go into, there we go. If people in the rest of the world knew what I knew, Bitcoin would go to $10 million. Wait, hold it. Wait for it. Tomorrow. Tomorrow. I'm like, wonder what that's about. What's that about? That's about legacy blowing up, and maybe about politicians on both sides of the Pacific Ocean not caring. Trump's like, fine, let it blow up. Let it blow up. And Z may be doing the same thing. Now, I don't think Trump knew this was going to happen, but it's happening. So nobody can blink, and they just have to let everything blow up. And then they have to have the Bank of Japan. Most likely, this is the Bank of Japan, ECB, and the Fed all in at once, just like COVID. Okay, so the orange man, looking very orange, says politicians are lining up to kiss my ass. Right. Okay. This is not the kind of rhetoric that we need, especially with the problem with our treasury bond market, although it's probably true. Right. It's like, we're not doing business with anybody who's not reorganizing ourselves. And you have to remember something. Trump was the pretty boy front man for the Atlantic City mafia back in the day. Right. And Trump's got some quote where he talks about, uses some colorful language to talk about how he would impose 25% tariffs on people. Everyone thought it was cool that, he's got like the beautiful wife and he's all garish and saying, I don't care, and they're trying to knock him off and they're trying to put him in jail. It's like a gangster. Now, don't be shocked when a gangster acts like a gangster. And it's just like, I don't care. That's what's happening. And that's why financial markets are coming unglued, because no one expected this. This was the business friendly guy. And he's like, well, I'm going to make a policy change and I don't care if the whole thing gets nuked. And that's what's happening. China has ripped us off left and right. And now it's our turn to do the ripping. And the whole financial system comes unglued, 6 hours later.
I mean, it's not anything on him. I mean, it's just he's doing this, and this is it's the orange swan. It's the orange swan event because nobody knew that tariffs were going to trigger something in the bond market. Nobody knew. Okay, so yeah, we got 104% on China. Nice. Secretary of Defense says we're taking the Panama Canal, get out of our backyard. He's not wrong. They've got our farmland. They've got the Panama Canal practically. And they've been at war with us. They've had a 50-year plan. They've been at war with us for a long time. So, you know what? From a policy point of view, I don't blame these guys for just saying, you know what? We're not doing this anymore. We're just not. We're not doing it anymore. We're absolutely not doing it anymore. Okay, US dollar hits highest level. Chinese are like, yeah, we're just going to let our currency go to zero. You want to tax our goods? Fine. We'll just make our goods cheaper. And this could go on for a while. This could go on for a while. Now, of course, the Chinese don't understand that if you have a total collapse in your currency, that once Mr. Market in the currency market gets rolling, that can be really hard to stop. You have a currency problem. That can be really hard to stop. Because what are the Chinese going to do to stop their currency from falling? They're gonna raise rates. What are they going to do? Capitulate to the orange man? No. That could just spiral. Do we even have any idea what happens if the Chinese currency collapses? I don't know. You could have a geopolitical event because they could use it to blame the United States. Again, it's the whole communist thing, right? They can use a currency collapse as propaganda to, I don't know, to mobilize, to do something insane. Like, this is getting goofy. Like, now. Goofy. Okay. So, they put 84% on our tariffs. So, no more iPhones in China. China says we are prepared to deal with uncertainties. Ooh, be careful about that, homie. Careful, right? We are prepared to deal with what? Not uncertainties. You know, once these things, this is called unintended consequences for them and the orange man. You know, they effed around and now they're finding out about economics and about absurd leverage in our system. This is a very important headline. Japan says they will not sell U.S. treasuries solely based on our relationships. Yeah, you're right. They won't, because if they do, they're going to make this nuke even worse. However, there could be somebody out there aggressively selling treasuries now. Could be the Chinese, and you haven't heard one word from Putin. That's very interesting. You haven't heard one word from him. He's normally all over the tape all day long, not saying a word. Probably because he's really scared about, my guess would be he wants to stay out of it, right? Right. There's no tariffs on Russia, one. But two, he knows, I think, that we're determined to fight the Chinese. You know, like they said it. Like Putin, the last thing I heard from Putin was like, don't doubt Trump wants Greenland. Don't doubt it. Okay. In other words, radio silence from them is interesting about the geopolitical situation heating up. Okay. Apple flies 5 planes of iPhones to avoid tariffs. It's just like iPhones for the wealthy. I don't know. Treasury Secretary Bessent says China can raise tariffs, but so what? So what? Like, they don't care if it blows up. They don't care. They don't care, and we don't care. It's like, let it blow up, and we'll see who's left standing. And this is how you know the Fed has got to come in huge. And they're counting on it. I mean, they've probably already been on the phone with them. Like, politics aside, okay, so this is unbelievable, right? An absolutely spectacular meltdown. The basis trade is blowing up, sparking multi-trillion-dollar liquidation panic. Okay. So there's all this stuff here. All right. You know, this is, I don't know, people doing this trade back when, and this is people doing this trade now. Okay. You know, hedge funds had borrowed money, possibly from the Fed itself, I think, to just do this trade. Huge, trillions. And it's blowing up. That's why bonds are moving. That's why everyone's going to freak out. Fed urged to bail out hedge funds during next market crash. That was March 28th. Okay, Jim Bianco, who is the mother of all, I mean, he is the preeminent fixed income strategist, period, end of story. I knew this guy when he was running a technical analysis club, and he helped me get my first job, and now he's huge. Something has broken in the bond market. We're seeing a disorderly liquidation. If I had to guess, the basis trade is in full unwind. Since Friday's close, the interest rate on the long bond is up where it should be down. 56 basis points or 0.5% in 30-year bonds is a lot. A lot, especially in a 3-day period. The last time this yields this much in 3 days was January 7th, 1982, when yields were at 14%. I don't know if that registers with you. I mean, when something's at 14% and it moves 0.5%, you're like, okay, well, that was a lot back then. Now it's at 4% and it's moving 0.5. I can't. It's got to do with something called duration. I saw it like multiple times throughout multiple years of education. Sort of get it, right? It has to do with interest rate sensitivity. Long bonds are very sensitive. So if you move interest rates 1% for 30-year bonds, oh my God, that's like, I don't know, that's like 15% in Bitcoin. Huge move, huge. This kind of historic move is caused by forced liquidation, not human managers making decisions about the outlook for interest rates at midnight. If this keeps going, the long bond, aka the thing that they derive the mortgage rates from, the thing the Trump administration wants to go down, is going to go to 5%. Right? It's like parabolic. As the chart shows, since Sunday night, our bonds are going down. This is why Arthur Hayes is going, this is $1 million Bitcoin. Sell bonds, sell stocks, sell dollars. That's it. The only overlay is the 30-year. It was the blow up in English bonds in September of 2022, where Liz Truss lost her job in like an hour. Not an hour, in like 3 days. Okay, that was 135 basis points in 5 days. We are now 67 basis points in 2 days. S&P futures are down again. This sell-off might not be about tariffs, but on a realization that there's something wrong with the bond market, which is what I said in the beginning, right? You have a huge bond market problem. He's not even talking about the private equity problem. And everybody all of a sudden goes, oh my God, something's wrong. And when something's wrong, what do? What do the machines do? What do the people do? They just pick up the phone and they sell S&P. Oh my God, something's wrong. I don't know what's happening. Sell S&P. It's the only liquid thing out there. So if you have an across-the-board legacy meltdown, yeah, you might get a lurch lower in Bitcoin. It might try to go down. But if this gets out of control and the Fed has to come in huge, that's gold, that's Bitcoin. That's what I think. Now, of course, altcoins, like for example, I hate to say this, but you got to start asking yourself about everything. Solana, XRP. You got to start asking yourself, could this be one of these things where Bitcoin holds or goes up and everything else gets smacked? I was afraid of that a day ago. I'm like, don't get alarmist. Now, if you have this problem and you have a disappearing act in S&P and Arthur Hayes on the tape pressing this, I mean, Ray Dalio is pushing out chapters upon chapters of this is the end of the world, the end of the economic order. Okay, maybe. But what's the beginning of the new one? They're still negating the positive solution. So either Bitcoin's going to 250 or Michael Saylor is going to get liquidated. I don't see a middle ground. I really don't. I don't think this is China selling bonds to punish the U.S. There are no good daily statistics to measure this, but I still contend that if this were happening, the dollar would be plummeting. The dollar index is up since Thursday, suggesting foreign net buying is still coming into the U.S. market. So, like I said, the dollar is lower, but it's not catastrophically lower. Okay. By the way, the U.S. Treasury has an auction of 39 billion 10-year notes on Wednesday and 22. Oh my God, look at this. Holy shit. Hang on. Now, try to follow this. So you have hedge funds blowing up, selling the bonds, and Uncle Sugar has to sell 40 billion in the 10-year note, and so they have to sell $70 billion in long-term bonds, and hedge funds are forced sellers. Who is going to buy those bonds? This is a huge problem, right? There's never been a failed auction of treasuries. A treasury auction can fail. They don't force banks to take the bonds. It can fail. You have a failed treasury auction, you got systemic problems. Matter of fact, I personally think, like, if they have to do this like Wednesday and Thursday, the Fed lets this happen, right? Because they don't want to be perceived that they're like monetizing the debt. The Fed lets this happen, and if it's bad, then they come in huge, which I think is 75 or 100 basis point in cuts plus emergency liquidity, QE, the discount window, the whole deal, right? Because if they let this blow up with the tariffs, it could get totally out of hand. Totally out of hand, right? And even if the Fed is, even if Powell is one of these guys who's working against the interests of like populists like the Orange Man, I don't know, man. I don't think Powell wants to sit there and be the guy that let inflation get out of control and then let the whole system blow up. They don't want that. Okay, speaking of the whole system blowing up, Doomberg is running with, Dalio sees once in a lifetime collapse in the economic and political order. Okay. But this is why we Bitcoin, right? This could be it. This could be Bitcoin's big moment, because it's easy to buy Bitcoin when you're talking about the Bitcoin strategic reserve. It's harder to buy Bitcoin when you're looking at a legacy financial crisis and at least the threat of liquidation by Michael Saylor. Like, if Michael Saylor gets liquidated or he has to start selling, that's the end of everything. So, I think it's easier to embrace Arthur Hayes' view on this. Okay. So this is all this hedge fund gore. You know what I'm saying? Okay. So Larry Summers, who's like an economist, who's like been around, been the Treasury Secretary, says U.S. might be headed for a serious financial crisis. So, he can read like everyone else. Like, the bond market nerds know what's going on here. Okay. So I don't really know what this means, but again, this is important because when you have weird stuff going on, right? When you have weird stuff going on in like bond markets, right? And I'm going to come off the screen share to tell a 2008 story. So Goldman, we as in not me, but the top guys knew that there was this housing toxic mortgage security blow up that was going to happen. But, I was on a stock trading desk and we didn't get it. I mean, we got it, but then we started to get these phone calls. We started to get these phone calls from the guys that were in charge of lending between banks, right? Just like really like overnight, like, Lehman Brothers would come in and say, hey, I need some money overnight. We go, okay, this is the rate. All right, done. And then tomorrow you send us our money back. So these guys were calling us up going, the overnight lending market, the lending market between banks is shut down. Nobody will lend money to anybody. And those guys ran home and said, I'm going home and I'm putting my money under my mattress. That this is going to blow up. They would call us up and be like, listen, and I remember because I had a good relationship with the person who was trading bank stocks at the time. Right. And they would just, they were just like, they got the call, they put the phone down and they just shorted everything. They just was like indiscriminately shorted everything in the financial sector and it all collapsed. But no one really understood what was going on. Just like no one understands what's going on now. Right. This is all massive bond nerd stuff. And this is when people get caught because they don't understand what's going on. And again, this doesn't even touch on these private equity characters. I mean, this article was in the Financial Times. It's in the Financial Times, right? Where the hell is it? Oh, yeah, here we go. Okay, so I've given you quite the lecture on equities, and you're probably trying to figure out what the hell this means for crypto. And I'm just going to tell you what it means for crypto. It means it's time for Bitcoin. That's it. It's absolutely time for Bitcoin. And the thing that was funny is last night we were selling it with reckless abandon. Right? We were dumping Bitcoin thinking this is going to be a catastrophic problem, and maybe it's not. Okay, so here's Sailor's liquidation, right? So basically, Sailor is long more or less at the old all-time high, like 67K, something like that. So his price is right here. And, Bitcoin's 13% away. And, that's it. That's the risk we're living with. Now, of course, if Michael Saylor gets liquidated, all coins will go to zero, right? You'll just have, stuff will get vaporized. So you just need to be cognizant of that risk, but you also need to be cognizant of the fact that this thing might go down or turn around and just fly up. Just fly, right? I mean, Bitcoin is roughly $1 trillion instrument. You do realize that in equities, like they've already subtracted 10 trillion in value. This says nothing about the total value of the treasury market. I mean, you're having trillions of dollars disappear every day. Like one guy was rightly making fun of the Orange Man, where the Orange Man was like, yeah, well, we put $2 billion in the treasury in tariffs yesterday. Yeah, bro, but no, $2 billion. Put $2 billion in the treasury. Yeah, but dude, you're losing like, $1 trillion a day in market value, right? You can't have markets acting like this without someone blowing up. That's just how it works in legacy, right? And it worked that way in crypto with FTX, right? I mean, FTX came out and you had a system-wide liquidation and crypto collapsed and then died for 6 months, right? Now, in this case, this appears to be a legacy problem brought on by, I don't know, trade policy or trade policy error, whichever you like. So what do you do? Okay, well, some guy was asking me, is this the buy zone? I'm like, yeah, I still think it's the buy zone, but it may just be Bitcoin. You cannot have a total meltdown if they start coming after S&P futures. Now, the good news is when you see the Fed, this is called crypto chicken. Crypto chicken. Like, there's no doubt you're going to see the Fed, and there's no doubt you're going to see the Fed huge. The Fed comes in with 25 basis points. They're essentially telling you they don't care. They don't care. Or if they do come in with 25 basis points, they'll be in the next day with 50. The Fed can do things in between meetings. They have to. There's no way they can wait till May on this because it's getting nuked. I mean, Jim Bianco just wrote about it. You don't think the Fed sees what Jim Bianco tweets? And the Fed knew about this 3 days ago. And Michael Saylor might have known too. He might have known too. Maybe he's getting calls from banks going, uh-oh, Mike, this is getting close here, starting to get upset. Mike's kind of laughing all the way to the bank, though, because he sold all this legacy paper to the system to buy Bitcoin, hoping exactly this would happen. Because you could have two legs to Bitcoin. You could have a negative event, which is this kind of financial problem with the Fed. And then there could be some sort of positive AI event later where everybody goes, yeah, we really need to get outside this system. I mean, if hedge funds can borrow trillions and blow up like this again, that's the key word, again. How many times does this have to happen before people, the decentralized world takes matters into their own hands? Now, that's later. All right. So that's what's going on today. That is the market update. My advice to you is to be careful, right? Just make sure that whatever you're in, you like it. Make sure whatever you're in, like Warren Buffett has a tweet out today somewhere that, if you buy a stock and you can't tolerate a 50% decline in that stock, then don't play. And that, unfortunately, is true. I had my business partner say that to me effectively the other day. There are some things I'm willing to tolerate a huge drawdown in. Right now, it's Bitcoin, and I'm willing to tolerate what's going on in ETH.
because after hedge funds get done doing this, DeFi will be back. That's it. That literally is it. So you're going to hear all this wah, 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 wah about legacy. I mean, by the time Cointelegraph figures this out, the Fed will have come in. The Fed will have come in, because I don't even know how they're going to explain this to like the average Joe, that somehow hedge funds turned around and blew up the whole world. Right. And if you have China and all this stuff, you know, it's like the ripple effect. You know, you ever heard chaos theory? You know, the butterfly flaps his wings and you get a hurricane somewhere else on the planet. It's the same way. The US and China shutting down global trade triggers a blow up, which has to bring in the Fed. And if it doesn't, well, you know, we're going back to caveman days. But the Fed does come in, Bitcoin could go to 250. Bitcoin could go to 120 like that. Everyone forgets about the era where Bitcoin moved like an altcoin. Now, Bitcoin is a huge instrument now, but is it really? This is the final word, right? If you're erasing $1 trillion a day off the stock market, why can't a $1 trillion asset do a 40% move in either direction? Right? I mean, Bitcoin could go down and sale could get liquidated, or it could go to 120. Because even though everyone's like, oh, it's Bitcoin, it's huge. Is it? It actually isn't. It's a teeny weeny instrument compared to what's going on in legacy. Oh, and by the way, I forgot to tell you this epilogue. So Uncle Sugar has to sell 10-year notes and 30-year bonds, and JP Morgan's earnings are out on the 11th. So you have Uncle Sugar Wednesday and Thursday selling bonds at the same time everyone else is trying to sell those bonds. And JP Morgan's earnings are on Friday. And God forbid they have to disclose, or anybody smells that they've got losses that they don't have. Okay, here's the message from Buffett. I know I said I was done, but we could end it with this. So by the way, this guy sold all of his Apple at the top. Legend, right? And I knew that. He was like, oh yeah. Bezos, all these guys, they sold everything at the top. Everything. You got to be prepared when you buy a stock to have it go down 50% or more and be comfortable with it. Okay. That's probably true with altcoins. That's true right now. Like if you look at whatever you got right now and it goes down 50%, you're okay with it, then keep it. Right now, the only thing I'm okay with going down 50% from where it is right now is Bitcoin and ETH. But he's right. He's right. And there's another guy in here. I know I said it was done, but I'm not done. So, okay, there's another guy in here that says when the S&P goes down the way it has, okay, stocks were higher 1, 3, and 5 years every time. Now, how does that happen? The Fed's got to come in. Like they got to come in huge, huge. Now, if they did, I don't know, you could have a very dramatic event where it goes down massively, the Fed comes in, and then things come back. The thing is Bitcoin. We'll see you tomorrow.